Happy Friday and welcome on in, everybody. Hope you're doing well today. If you're new to my channel, let me welcome you. My name is Carlton Dennis. I'm a licensed enrolled agent and I'm a tax strategist. I teach everyday business owners and real estate investors how to leverage the tax code to the fullest extent. And if you have been a part of some of my videos or some of my Instagram reels and you've been a part of growing this channel, I just want to take the opportunity to say thank you so much. I appreciate everything that you've done for us. And we are going to continue to put out more and more tax content. My job, really, as a tax professional who studies tax law, is to help you interpret some of the most advanced strategies within the code so you can get closer to financial freedom. And I think that happens with getting the right information. Many taxpayers who I work with typically have a CPA already that's filing their return, but they don't have somebody that's on their team helping them develop strategies. So we decided to put the Carlton Dennis YouTube channel up on YouTube back in 2020, right in December. And one of our very first videos that we launched was how to pay yourself as an LLC. That video recently crossed over 5 million views, but all it did really was share with people how to use an LLC structure for saving money in taxes. And this sparked a widespread conversation around S corporations and whether or not you should be using management companies and placing children on payroll. And now there is more activity on the internet as it pertains to tax strategy. And I'm so happy for that. So thank all of you guys for sharing those videos and thank you for being subscribers of my YouTube channel. Now, I am going to be breaking down Donald Trump's recent tax proposals, but I got to ask you guys, did you guys see any of this coming? I mean, with everything going on in the news and with Trump and now with Biden stepping aside, with Harris stepping in. Was this something that you guys saw coming? Put a yes in the chat box if you did, put no in the chat box if you didn't. Obviously, a lot of people have mixed reviews as it pertains to whether or not Biden was in a position to be able to lead this country any longer. And some people saw the writing on the wall and saw that Harris would be coming in. That being said, now Harris is going to battle this out with Donald Trump. And Donald Trump has made some recent tax proposals that seem pretty interesting. Now, as a tax professional, I kind of am here just to interpret the tax code for you. So one of the things that I want to do is be able to share with you what these recent proposals are going to be able to do for you. But before we jump into these new tax proposals, let me remind you what happened in 2018. In 2018, Donald Trump announced his first initiative, the Tax Cuts and Jobs Act. And how many of you guys remember that? Back in 2018, previous to COVID and even knowing where Wuhan was in the world, right? You guys remember what it was like back in 2018? I remember what it was like. I used to have clients that actually used to come into the office. We used to hug each other. We didn't wear any masks. That was what it was like previous to 2020, all the way going back to 2018. But when Donald Trump released his Tax Cuts and Jobs Act, it changed everything within the tax code. I just remember all these CPA conventions, all these tax professionals jumping on the internet, sharing what the new tax codes were because so many people were unaware of what those benefits were going to be. Let me share with you some of the benefits that came with the Tax Cuts and Jobs Act. If you're somebody that is self-employed, you probably immediately felt the effects of the Tax Cuts and Jobs Act. And the reason why is because Donald Trump created the QBID deduction, the Qualified Business Income Tax Deduction. And what it means to you is if you're a self-employed individual with a sole proprietorship or an LLC or even an S corporation, and you have flow-through income, that flow-through income can be subject to a 20% deduction. This was brand new and it got introduced in 2018 as a part of Donald Trump's Tax Cuts and Jobs Act. Pretty cool, right? A 20% deduction on your business profits, but it's up to a certain limitation. Now, some of the other things that business owners have been able to benefit from have been able to use bonus depreciation. As a taxpayer, I teach on bonus depreciation, but I also use bonus depreciation too. Vehicles that weigh over 6,000 pounds qualify for special bonus depreciation rules where you can write off the entire vehicle's purchase price in 1 year. How many of you guys have utilized the bonus depreciation strategy before? Go ahead and put that in the chat box if you have. That being said, the bonus depreciation strategy is now coming to an end pretty soon, right? Because we're sitting here in 2024 and Donald Trump's tax laws only exist until 2026. So bonus depreciation is at 60% now. It goes to 40% next year, and it's going to go to 20% the following year. But after 2026, once we hit into 2027, we no longer have bonus depreciation. So those are some of the big benefits that business owners got to experience. What about W 2 taxpayers? If you're a W 2 taxpayer, you typically file your tax returns with very little deductions inside of it. However, one of the big deductions that most W 2 taxpayers get to capitalize on is taking the standard deduction. Previous to 2018, the standard deduction was only $6,000 and then $12,000 for married couples. If you were single, you got a $6,000 deduction. If you were married, you got a $12,000 deduction. Well, in 2018, Donald Trump doubled those standard deductions. If you were single, you now got a $12,000 standard deduction. And if you're married, you get a $24,000 deduction. Fast forward to now, those standard deductions have continued to rise due to inflation, and they will continue to be adjusted due to inflation every single year. So these are some of the benefits that many W 2 taxpayers got to experience from the Tax Cuts and Jobs Act. That being said, there's a lot of changes that negatively impacted a lot of taxpayers out there. One being the SALT tax deduction. In case you're new to the SALT tax deduction, let me explain this acronym to you. SALT stands for state and local tax. And that being said, many of us who live in states that have state tax, we would like to deduct that state tax off of our tax returns, right? That is something we used to be able to do prior to Tax Cuts and Jobs Act of 2018. You used to be able to completely write off your state taxes and completely write off your property taxes. But after 2018, the Tax Cuts and Jobs Act limited state and local tax to only $10,000. Now, just think about this for a moment. You're living in New York City where you're already paying high state taxes. You're a successful financial analyst working Wall Street, and you live in Manhattan. So you're already paying a city tax for living in the city of Manhattan. Then you're paying a state tax for living in the state of New York, right? And then you might even have to pay some other local taxes because of how expensive it is just to be in Manhattan. They might even include some additional local taxes. Now, when you think about it, most taxpayers who are taking the deduction, the standard deduction, they're usually taking the standard deduction if they're not homeowners. But if you happen to own a home, you might want to write off your property taxes, your state taxes, your mortgage interest. Well, with the SALT tax deduction being limited to only $10,000, you're only able to write off $10,000 between your property taxes if you own a home, your state taxes if you live in a state like New York, and even your local taxes if you live in a city like Manhattan. If you're somebody that's making a six-figure salary and you're a homeowner, you're probably paying way more in state taxes and property taxes than $10,000, but you're limited to only being able to take $10,000 in a tax deduction. These were some of the limitations that came with the Tax Cuts and Jobs Act. That being said, we now have some new proposals coming in the way from Donald Trump, and I want to go over those new proposals with you guys as well here today. So what we're going to do right now is we're going to transition over into the iPad. And I'm going to talk to you about some of the changes that have recently occurred. Really, the changes that I'm anticipating if Trump were to get reelected, that he could possibly propose, and we can determine whether or not this would actually go through. His first proposal, which honestly might be the hardest to grasp, is replacing income taxes with tariffs. Now, at a meeting with GOP lawmakers at the Capitol Hill Club in Washington, D.C. in June, President Trump floated the idea of replacing all personal income taxes with tariffs. Okay. So instead of having to pay federal income taxes, which is something that we have been doing for quite some time now, we would have to pay higher prices for certain imported goods from other countries. So all of our products and even some of the food and drinks that we drink here in the United States, they get imported, right, from other countries. So rather than paying a federal or state income tax, what if we were to pay tariffs and we just pay taxes on imported goods? Now, because a tariff is a tax that is that countries impose on goods or services imported from other countries, one of the potential cons of this could be that we will see higher prices on certain imported goods. If you rid away with federal income taxes and you go to taxes simply on goods, it's all about trade then. It's all about what you can do to get the most trade. So we're going to see a lot of tariffs end up becoming the reason why we're paying so much more for food, so much more for products, so much more for imported goods if this were to happen. Now, there's also relatory tariffs from other nations that could be imposed. So there's certain products and goods right now that we get that don't really tax us a whole lot that could all of a sudden come out of the woodworks essentially with this being proposed. But here's what some of the potential pros are. We're eliminating federal income taxes, which right now are as high as 37%. This could save an enormous amount of time, effort, and energy since we don't have to file tax returns anymore, which would be pretty awesome, I would say. We get the option to kind of save our money and start buying American based goods from American based suppliers, helping to stabilize the American economy. This could also lead to a dramatic reduction of tax audits, a reduction of us needing to have really the IRS tax force enforcing us, and the president having negotiation power when dealing with foreign nations without having to use military force. Also, we don't have to keep track of all of the past tax returns and past documents anymore because we essentially wouldn't have a federal tax system. This is a very big stretch. Eliminating income taxes and replacing them with tariffs would be a very big ask. But I want to know, what do you guys think? Do you think something like this is even possible? Let me know in the chat box. What are your thoughts on this? Claude Barnes, I see Kimmy Rowe, Leon. What are your thoughts on replacing income taxes with tariffs? Is this something that you guys can see happening? Now, the second proposal that he proposed is just getting rid of taxes on tips. This one I actually am pretty excited to see. If this is possible, this would mean tipped workers would save a large amount of their money, which is great because a lot of people who earn tips, have to report those tips. Normally in restaurant type businesses, those tips are shared. These workers would have more money to spend, which could also help stimulate the economy. And let's be honest, the people who got impacted the most during COVID were really restaurant businesses, those who lived off of their tips. I know a lot of restaurant owners and a lot of employees of restaurants who make half of their salaries in the year simply off of the tips, not just off of the actual paycheck they're receiving. And then it would also make tax compliance a lot easier for tipped workers because then they wouldn't have to go about tracking all of the cash tips that they receive versus the digital tips that they're receiving when payments are being processed. Now, one of the cons would be that government would receive less money in tax revenue. But if we also went to a tariff system, we would be able to make up for some of that with the tariff system. So just something to take into consideration. What are your guys' thoughts on getting rid of taxes on tips? Claude said, I think it will lead to higher inflation. It's expensive to produce goods in the United States because of labor costs. Other countries will just implement relatory tariffs. I agree with you. Schedule income, tire schedule income, federal income taxes didn't happen until the year before prohibition. You're absolutely right. We used to be a tariff-based country, guys. So we were not founded off of federal income taxes. Federal income taxes didn't come until we were in, I believe, war. No, it was a civil war, and then we had to garnish wages from people's paychecks to then cover for the war. That was really an issue that most people felt was around taxes, but it was only supposed to be temporary. And then that law stayed in effect. And then the tax bill just kept rising, rising, and rising. And then we had Ronald Reagan come in and imply another tax break. And that's when we really got a huge, huge, huge tax break in our country. All right. So E. Thomas said, this is a model in several countries I lived in. It's a way where we have a flat tax that covered social services. This was the model I liked the best. All the potential pros you mentioned. Interesting. E. Thomas, I wonder what countries you lived in. Share with us what countries you lived in where they did that. I would like to have you on the show one day, stock up with Larry Jones. Larry, let's go. Reach out to my team. Claude Barnes said, the irony is that the American Revolution was really about paying taxes to the British. Yeah, we got pissed off when we had what, 1.5%, 2% tax. So then we started the Boston Tea Party and we started just dumping tea into the middle of the ocean. That was before we even actually had taxes imposed on us, right? And then war came, and then we decided, you know what, let's just garnish people's wages to pay for the war. And then now the government had a legal way of siphoning money from taxpayers' paychecks. And then they just never stopped doing it. Woo, crazy. All right, guys, here is the third proposal: a reduction on corporate income tax from 21% to 15%. So, this one was in an interview with Bloomberg. Trump stated that he wanted to reduce corporate income tax from 21% down all the way to 15%. Now, prior to him stating this, when he implemented the Tax Cuts and Jobs Act, he took down the C corporation tax rate from 35% all the way down to 21%. So the C corporation tax rate was already extremely high. He brought it down to 21%, which is pretty nice. Many business owners have been able to benefit from corporate income tax rate relief. That being said, he wants to take corporate income tax down from 21% to 15%, dropping it another 16%. And this would mean that he could also stimulate the growth of the economy again, helping business owners. It could create a more favorable business environment, sparking more entrepreneurship. It could create incentives for people to start businesses. But one of the cons is that it reduces tax revenue. Economic growth, though, sometimes stimulates more tax revenue, but at the same time, in the short term, this would decrease the amount of tax revenue. Now, this one is directly in relation to business owners. Obviously, many business owners who are seeing this are probably like, yeah, that would be amazing. But for many taxpayers who are reading this right now, you might have mixed reviews. You might say, why should business owners be able to benefit from lower tax rates? Why shouldn't W 2 taxpayers get to benefit from lower tax rates? That is a great proposal. Here's something that I want you to understand about how the tax code works. The tax code is an incentive system. So when you decide to spend money on whether it's buying products or services to help others, the government is going to give you an incentive and allow for you to take a deduction against those products or goods or services that you were able to provide. If you decide to hire people, you're doing something that the government wants you to do. You're providing jobs. If you're able to invest in real estate and not live in it yourself, but turn around and provide it to somebody else, you're providing affordable housing. So the government has created an incentive system around how you spend your money. And they really want you to spend your money for other people. When you start a business, you're starting a business to provide products to other people or services to other people, right? So the government's going to turn around and give you an incentive for that. When you decide to buy a property and not live in it yourself and turn around and have as an investment property, you're providing affordable housing for someone other than yourself. Anytime that you do something for somebody other than yourself in the tax code, there's typically an incentive for it. Well, let's look at the W 2 taxpayer. As a W 2 taxpayer, what can you really do to spend money that turns around and reduces your tax bill? Well, you can put money into a 401k, but that's your own qualified retirement plan, right? So that benefits you. You can pay off your student loans and get a student loan interest deduction, but who's the one who took out the loan? You took out the loan. You can claim your children and get a little $2,000 tax credit, but that's only a $2,000 tax credit, right? And you could put money into a traditional IRA, but if you make over $150,000, you can't even contribute anymore to some of these traditional IRAs, right? You can give money away to charity, but anybody can give money away to charity up to a certain extent to get a tax deduction. So as a W 2 taxpayer, you're working for somebody that took a risk on you. So in return, the IRS has limited the amount of deductions that you get to take because the person who really took the bigger risk was the business owner. This is why I think it's so important as a W 2 taxpayer to always realize how the tax code is written by getting your advisors to teach it to you. And if you understand that the tax code is an incentive system, you're going to align yourself to put yourself on the right side of the playing field. If I know that business owners get to write off more things than W 2 taxpayers, but I'm a W 2 taxpayer, it would probably be in my best interest to figure out how to become a business owner without having to sacrifice my W 2 job, unless that's something I actually was passionate about. One of the benefits of real estate is that real estate is viewed as an investment and as a business in the eyes of the IRS. So for a W 2 taxpayer who loves their W 2 job, it's actually one of the smartest things that you can do is to invest your hard-earned money into rental real estate because you've started a business, but you didn't lose your money either. It's parked inside of your investment property. And I would argue that many W 2 taxpayers who are a little bit more risk adverse would rather go into real estate versus starting some random online Amazon business or day trading where they could just lose all their money, right? That being said, the government gives you incentives when you go into real estate, and some of those incentives revolve around depreciation, which, if used correctly, can offset your W 2 and your 1099 income. One of the things I want to show you guys here is a tax proposal because we have the tax free wealth challenge that's starting Monday. And the tax free wealth challenge is a 5-day virtual event. I put on this virtual event to go over tax strategies, and I don't teach any of these tax strategies in this 5-day event on my YouTube channel intentionally. So I charge $300 for a VIP ticket, $100 for a general admission ticket, and you get to spend 5 days virtually with me going over strategies. But here's what I do for some of the members who sign up as VIPs. I choose some of you VIPs who have given me some of your financial information, and I create one of these tax projections for you where I'm kind of identifying how much money you're making right here. Let me go ahead and show you guys this. Uh-oh. I think I'm doing too much now. How do I get that off? Oh, wow. I didn't know my screen could do all this. Okay. There we go. So what I do with my tax projections is I identify your income from your business. If you're self-employed W-2, this is a little bit different, but identify your income first. For this taxpayer, his net profit is going to be roughly $3.3 million for this year. He has 3 LLCs. He has 1 S Corp. He lives in Texas. He's married. He has 1 kid, and he has $300,000 to invest. These type of ingredients for a tax professional like me is extremely important because what I'm trying to do is I'm trying to identify opportunities to reduce his annual tax that he's going to pay. And for this person, I've identified so far about $439,890 of estimated tax savings there. I believe that if we know how much we can potentially save in taxes right now, that we're going to do something about it, right? We're going to go ahead and invest the money. We're going to shift income around, whether it's an income shifting strategy, a retirement strategy, an itemized deduction strategy, or a depreciation strategy. We're going to try to implement strategies between now and the end of the year to bring down our taxable income. And this is when tax planning season starts, guys. It's right now. I'm about to jump into tax planning season with a lot of these members. But before you decide to onboard with me and my team or give us an opportunity, it's nice to have some of these tax strategy projections done to know how much money is there to potentially save. For this client, he's a W-2 taxpayer. He's making around $238,990. He lives in California, which is a high tax state. How many of you guys are living in high tax states? Put a yes in the chat box if you are, but no in the chat box if you're living in a state with no state income tax. He has no kids. Okay. So there's no kids to place on payroll, and he's single, and he has about $90,000 to invest. Okay. So what I did was I just identified 4 areas: depreciation, retirement, income shifting, and some itemized deduction areas. I identified 4 areas of opportunities to reduce his annual tax in the first year by around $60,709. That $238,000 taxpayer is only paying about $1,000 now in total taxes for the year of 2024 because he's going to receive this tax strategy analysis, and then I'm going to show him how to implement these strategies. So, question I have for you guys: would you want for me and my team to create one of these for you? Would this be helpful for you to get a tax strategy analysis produced before the end of the year? Would this be helpful for any of you guys that are sitting on this chat here today? Here's what I'm going to do. For some of you guys that are sitting on this chat here today, you guys can sign up for the tax-free wealth challenge. Let me show you how you can do so. And sign up as a VIP. We have about 25 VIP tickets left. For those next people that purchase their VIP tickets, I'll create a tax strategy projection for you, and it will be delivered to you during the tax-free wealth challenge when you decide to join. The tax-free wealth challenge link is being posted in the chat box for you guys. If you guys are wondering, how do I sign up for this? We are spending 5 days with each other. The event is entirely virtual. It's all online. It's about an hour and a half every day. We start on Monday. And day 1 is going to be mindset training. Why are we doing mindset training on day 1? Because If you do not have the correct mindset around how you're going to pay 0 to 15% in income taxes every year, it's going to be very hard for you to grasp some of the strategies I'm going to be covering over the next 5 days with you. I want you to have the correct mindset going into this on how tax planning works, how to protect yourself from the IRS, and what you're going to need to do in order to make sure that you're leveraging Code Section 162A to convert your everyday expenses into tax write offs for yourself. So, day one is going to be mindset training. Day two is entity structuring. The reason why I have day two entity structuring is because many taxpayers who are on this call here today are going to be either brand new LLC owners when they start working with me, or your existing LLC or S corporation owners, and you're going to start doing entity layering, where we're going to layer entities on top of each other. I love layering entities to encourage anonymity, to prevent from creditors and outside people finding out who you are, coming after your business and your profits. But more importantly, to protect your wealth. And if you're somebody that believes in protecting your wealth, you're going to want to have your entity structured correctly. We go into advanced entity structuring on day two. Day three is advanced auto and home office deductions. If you're somebody that has a vehicle or multiple vehicles and you live at home, whether you're renting or if you own a home, you're going to want to be able to take advanced auto and home office deductions that extend past writing off a vehicle that weighs 6,000 pounds or taking a basic home office deduction. We're going to go over some advanced strategies that were taught to me by attorneys years ago in regards to how to leverage vehicles and home offices with the proper lease agreements. And I've been utilizing these strategies pretty regularly over the last couple of years, and they are pretty substantial savings that you can receive. Day four is income shifting strategies. This is more for my high net worth individuals. If you're making over 300, over 500, over a million a year, you're going to need to shift a couple hundred grand off your tax returns. I'm going to teach you how you can do income shifting strategies that take massive amounts of money off of your returns without having to put them into retirement accounts. So if you're somebody that's interested in advanced income shifting strategies, we'll be going into that on day four. And then day five is my favorite, advanced real estate strategies. I'll be showing you guys broken down tax returns on day five, how to read cost segregation study reports, how to set up the short-term rental strategy, how to qualify you or your spouse for real estate professional status, and how to use advanced depreciation to create a loss on your tax returns to offset your W-2 and 1099 income taxes. You can sign up as a journal admission for $97. But what this won't include is it won't include my tax strategy projection, my opportunity finder to determine what strategies are missing on your tax returns. You won't be a part of the Q&As that we're doing every day, which start at 6:30 Eastern. You will just be there for the live sessions, which is totally fine. It's up to you if you just want to be there for the live sessions. But what I'm doing for the VIPs who sign up today is I'm going to give out three of my courses, my Children on Payroll program. I'll give that out today for you VIPs that are signing up today. I only have 25 tickets left, so I'm just letting you know. My LLC tax strategy blueprint will come into your inbox today. This is a program that I've created for you, teaching you how to structure an LLC from start to finish correctly. And then my home office tax strategy guide. These are all video courses that I've created that you guys can get access to today, but when you sign up for VIP. Another thing that I want to share with you guys really quickly, if you're interested in learning more from me, I have a webinar that I'll be teaching on tomorrow morning. It kicks off at 10 a.m. Pacific Standard Time. So if you guys are interested in signing up, I'll be going over 5 investments that will immediately reduce your tax bill. This webinar kicks off right at 10 o'clock on the dot. It's an hour-long webinar. These 5 investments are all investments that I have aligned myself with to help me and my wife reduce our tax bill, and I'm sharing that with you tomorrow. So if you have never attended one of my live webinars, here's your chance to join. We'll post the link in the chat box here for you today, so you guys can go ahead and sign up and be on that. That's Saturday. That's tomorrow. Just an hour of your time could save you another 50, some of you another $100,000 on your taxes. So the Tax-Free Wealth Challenge, what is it? It's my only event a year that I put on where I get to spend 5 days with you going over advanced tax strategies. And then I get to work with a lot of you guys right after. It's no secret. We have an offer at the end of this event where you guys can sign up to work with us. And if you don't want to work with us, the benefit of coming to this event is at least you get to see how it would look like when you decide to do tax planning with a CPA or tax professional. You get the entire process broken down. All the strategies that tax professionals leverage broken down for you in your living room. You could sit back and just watch as I break them down for you. You'll also know what it looks like to work with my firm, my team, the process that we follow. So when the time comes and you're ready to actually do tax planning, you know what that actually looks like for you. That being said, these tax-free wealth events are pretty awesome because when I put them on, a lot of the people that sign up for VIP come on early to the Zoom calls, and I get to have these one-on-one session with you. I get to answer your questions, figure out where you're at in the world and what you're trying to accomplish. Many of you guys that would like for me to do your tax plan, would like for me to structure your LLCs, and my team, we work with you after the tax-free wealth challenge. After the tax-free wealth challenge, we work with anywhere between about 50 to 100 members, and that's about it. So I would highly encourage that you grab a ticket because we have about 500 people already signed up for this event, and we sell out of the VIP tickets normally on this day, the Friday, and then we have tons of general admission tickets if you just want to sign up for general admission. But the cool thing is that we give both the general admission and VIPs access to all the recordings. Okay, so there's no secret on my strategies. So if you want to take my strategies home with you and then use them with your CPA and try to figure it out, that's totally cool with me. I would, you know what? I would be encouraged. You should even invite your CPA to this training. Many CPAs don't do tax planning. They don't do tax strategy. They do tax returns very well. And if you would like for your CPA to have a better understanding of some of the strategies that are within the code, maybe you would want him to be here. Maybe you would want her to be here for the tax free wealth challenge. This is my last event of the year. So if you're somebody that wants to do tax planning with me and my team, tax planning starts August 1st, which was yesterday, and it ends December 11th. That's it. August 1st to December 11th. This gives you enough time to be able to figure out what type of assets to acquire, how much income to shift. We project out your income between now and the end of the year so we know how much your liability is going to be. And then we formulate strategies that are going to offset your liability. It may be 15 strategies you qualify for. It may be 38 strategies you qualify for. That being said, we're going to present all of the strategies that you qualify for in a chart-like format and show you how each strategy impacts your adjusted gross income, your taxable income, the date that you should implement that strategy. And the reason why I say date is because there are certain things that many of you guys should be doing right now. Like you should have already done some of these strategies going back to January. So we need to get a head start on it. But then there are going to be strategies that I might tell you, hey, Mr. and Mrs. Johnson, we're not going to move that money over into that corporation, or we're not going to do that strategy until right at the end of the year, right when we get up to Christmas. And that is what tax planning is about. It's about timing out your moves, timing out what you're trying to accomplish, because this is a game. And if you're not playing this with somebody, a coach that's helping you win at this game, and you're like every other taxpayer that's waiting until January, February, March, and April to go call your CPA, that's just like every other taxpayer who has a pulse that makes over $13,000. That's when everybody files tax returns. You're like everybody else. I don't know about you, but I don't want to go through the door with the masses. Like I want to go through that private secret door where the 1% are going through, where they're doing things that are completely advanced, completely ahead of schedule, and they get to benefit from some of the best parts of life. When you have an absence of fear of the IRS, an absence of fear of money, cash flow from your rental properties, and you're offsetting your tax bill from it, this is how you get to enjoy some of the best parts of life. And my job is to help you get there. I'm going to align myself to be able to spend some time with you over these 5 days to be able to show you how we can get there. But more importantly, so you have the access to the information that's been able to help my clients pay as little as 0% in income taxes. It is no secret that my clients have spent quite a lot of money to be able to be inside of our private client group, to be able to get access to this information that I'm pretty much going to give to you for about $297. So if you would like to sign up for a VIP ticket, go ahead and grab those. Those will sell out. And then general admission tickets are $97. Last but not least, our webinar kicks off tomorrow at 10 a.m. Pacific Standard Time, 1 o'clock Eastern Standard Time. So if you're somebody that would like to be a part of our webinar, the 5 investments to immediately reduce your tax bill, I would love to see you there. Last but not least, I want to ask you guys, what did you think of these new tax proposals by Trump? Do you think that they're going to go through? Do you think replacing income taxes with tariffs is a good idea? Put yes in the chat box if you do. Put no in the chat box if you don't. I would love to hear your opinion on that. Put yes in the chat box if you think replacing income taxes with tariffs is a great idea, or if you think it's a bad idea. I want to hear your thoughts on that. What do you guys think? Next thing I want to know, okay, appreciate it, appreciate it. The next thing I want to know is what do you guys think of getting rid of taxes on tips? Should we do that? Put a 1 in the chat box if you think we should. Put a 2 in the chat box if you think we shouldn't. Should we get rid of taxes on tips? Put the number 1 in the chat box if you think we should. Put the number 2 in the chat box if you think we shouldn't. What are your guys' thoughts on that? I don't know. What do you think? I'm in favor of it. This one I'm in favor of. And last but not least, what do you guys think about number 3? Reduction of corporate income tax from 21% to 15%. Should we reduce the corporate tax rate from 21% and bring it down to 15%? What do you guys think? Put a yes in the chat box if we should. Put no in the chat box if we shouldn't. What do you guys think? Claude said tax tips is basically double taxation, makes no sense. Let's see. Let's see. I need to grant. Tell me how to get one of those to start my business. We got some business owners in here, potential business owners. What do you guys think? Should we reduce corporate income taxes from 21% to 15%? Would this spark more entrepreneurship? Would this lead to business owners spending more money? What do you guys think? Ivan said 21% to 15% would help bring back companies to the States. Ooh, I like that. Think about how many people that you guys have heard of that are like, dude, I don't know if I want to live in the United States anymore. I think I'm just going to move to Puerto Rico. I think I'm just going to move my business to Puerto Rico. How many of you guys have friends or relatives or anybody that's ever considered it or actually did end up moving? I know I have some of my clients that were brave enough to make the decision and they did it. They moved, right? Guys, this is the stuff right here that gets those big millionaires and billionaires to come back. This is it right here. So I'm just letting you guys know, in order for America to be strong, we got to keep our billionaires in America. In order for America to be strong, we have to use American bought products and services too. This has been an interesting proposal. Some of it I agree with, some of it I don't agree with, but here's what I do agree. Right now, Trump doesn't control right now how much I'm paying in taxes, and neither does Biden. I have time to determine with the 5 months we have left in the year what I'm going to pay in taxes. You as a taxpayer have 5 months between now and the end of the year to determine what you're going to do about your taxes. Question: are you ready to get started on tax planning? If you are, go ahead and grab a ticket to the Tax-Free Wealth event. I look forward to being your teacher. I look forward to spending 5 days with you. We kick off on Monday, and go ahead and sign up for our webinar for tomorrow. I look forward to seeing you there. Thank you guys so much for joining me. Thank you for being a subscriber to the channel. I look forward to chatting with you guys all soon. Have a wonderful weekend.